For those who don't already know me, I'm Sian Jones. I work in compliance and regulations, particularly in the field of cryptocurrency. And today I'm going to focus on the United Kingdom and particularly on the recently issued HMRC tax briefing. I've actually been saying this about 3 seconds earlier. This is really weird. So, 3rd March, HMRC issued a document entitled The Tax Treatment of Activities Involving Bitcoin and Other Similar Cryptocurrencies. It basically covers anyone who makes charges or earns income in whatever form, so not only in the form of money, but in the form of, say, other cryptocurrencies, from activities involving Bitcoin. Now, from this moment on, I'm going to use the term Bitcoin and cryptocurrencies synonymously. Their briefing covers the whole spectrum. It covers all the main tax issues, those of VAT, which has been particularly contentious of late, corporation tax for businesses, income tax for individuals, and that includes self-employment income, and finally a capital gains tax, which may have some surprises. Can I just take a quick straw poll? Who has read the briefing or read about the briefing? Just a quick show of hands. And do most of you think that VAT doesn't apply to Bitcoin? Hands up if that's what your interpretation is. Oh, wow. So only a few people think that. Okay, right, good. So the good news for now is that it's been written by some people at HMRC who've been listening to folks who now got the UK DCA underway and have really got to grips with and demonstrated an understanding of crypto. It describes it as new and evolving, and that's suggesting that they expect the tax treatment to change. It says that determining the legal and regulatory status of Bitcoin is ongoing, which, as you've heard in the previous panel, is very much the case. And it acknowledges that Bitcoin is not in any way comparable with any other form of investment activity or payment mechanism. So it really recognizes it as something different. It's therefore taking a very pragmatic attitude in applying existing tax rules. It does make the point that VAT treatment has to be consistent with what will eventually be an EU position on VAT, because VAT is a Europe-wide tax regime. It also makes it clear that whatever HMRC says about it doesn't in any way reflect on the other regulatory treatments of Bitcoin. So how it's treated, which is at a pragmatic level largely as a currency for tax purposes, doesn't make it the same for any other purposes. It does make the point that the VAT treatment is provisional. This is not absolute, but you can rest easy in that the briefing is an official document. You can rely on it in submitting your tax returns, and whatever happens in future, or any changes, will not be made retrospective. The bottom line is that there's really no VAT on Bitcoins that are exchanged for goods, services, or other currencies, whether they're fiat currencies or cryptocurrencies. There's no VAT on mining Bitcoins. That's on the activity of creating Bitcoins by successfully mining them on the blockchain. and there's no VAT on the miners' transaction fees, the fees that they earn incidentally as a result of their mining activities. There's no VAT on exchange fees, and indeed no VAT on any other charges for arranging or carrying out any transactions in Bitcoin. So any markups or hidden charges or spreads, these are not subject to, there's no VAT, let's put it that way. For these purposes, it's treating Bitcoin just like any other currency. The VAT is still due on the goods and services that are sold in exchange for Bitcoin. So if you buy a cup of coffee, there's still VAT on the coffee. The value of the supply is based on the sterling value of Bitcoin at the time of the transaction. So for tax purposes, you have to take Bitcoin, convert it at the then rate of exchange at the time you sell a cup of coffee, and that's the tax value. However, it's dropped the provisional position that HMRC took, that it was somehow a goods in its own right, a single-use voucher, and therefore it's now clear that it's not goods in itself. So there's no VAT back on the Bitcoins that are exchanged for the cup of coffee. So it's no longer regarded as barter. So good news. So there's no VAT on Bitcoin businesses, or for Bitcoin businesses. Sorry, there is. There's still a VAT burden for miners, for exchanges, for payment processors, and in fact for most Bitcoin intermediaries. We have more rates of no VAT, or types of no VAT, than we have positive rates of VAT. We've got the usual standard 20% and the lower 5% for certain things. We've actually got 3 types of no VAT. There's a thing that's classed as zero rating, which is fully taxable at 0%. There's exempt, and there are things which are outside the scope. In relation to Bitcoin, the income from mining activities are deemed outside the scope. There isn't time this evening to explain why. It doesn't matter. It doesn't, as far as HMRC are concerned, come anywhere close to the VAT system. However, under a different class of no VAT, the exemption class, miners' other income, so the income from transaction fees, for example, are exempt, as are any charges over and above the value of Bitcoin that are earned for arranging or carrying out transaction in Bitcoin, so things like exchange fees. The impact for Bitcoin businesses is that the things which are exempt and outside the scope make it such that businesses can't reclaim the VAT on their purchases that relate to their exempt and out of scope supplies. So if you think for a moment that you're a miner and you buy expensive equipment and you pay VAT on that equipment, you import it and you pay VAT on the equipment, you pay, albeit a lower rate of VAT on the energy that you use. If you're in exchange, you've probably got hosting facilities and maybe subcontractors who are paid for their services and charge VAT. You won't be able to get the VAT back. Now, this unrecoverable input tax, therefore, is a cost. You're going to have to meet that cost either by a reduced profit margin, or you're going to have to raise your prices. Ultimately, that non-recoverable VAT is going to be passed on to your customers. So Bitcoin businesses who are making only exempt and outside the scope supplies, and that should be and/or, they can't register for VAT and they can't recover the VAT incurred on purchases. So Bitcoin businesses making taxable and/or exempt, who are making both taxable and exempt and/or outside the scope supplies, so they have mixed supplies. These folks are considered partially exempt, so they can register VAT, but they can't reclaim the VAT on the purchases that relate to exempt supplies or outside the scope supplies. This means that anyone falling in the partial exemption category, apart from having to study a 60-page booklet, tome maybe, on partial exemption and try and understand the formulae that are there for apportioning the exemption calculation. Apart from all of that, you have to allocate your purchases to the supplies, and where you can't directly allocate them, then you have to apportion them by a formula. This means that such businesses, such partially exempt businesses, are going to suffer an enhanced bookkeeping and record-keeping burden, and they're going to have to make more complex partial exemption calculations, and worse, that they won't know their true VAT position until each year has passed. Because unlike any other kind of VAT calculation, which is usually carried out quarterly, there are annual adjustments, so that you can't push your taxable supplies perhaps into one quarter and your exempt supplies in another quarter. It all gets averaged out over the year. So they're subject to these annual partial exemption adjustments. That's boring VAT. For most people, good news, we got rid of the nonsense of single-use vouchers. It's like money. You use it for payment. But for businesses, you've got some serious considerations about whether what you're doing is exempt or outside the scope, and whether you've got a mix of taxable and these non-taxable supplies. So, moving on to other kinds of tax, corporation tax, income tax, and capital gains tax. HMRC have made this very simple. They've said there are no special rules. We've had a look, and all the general rules apply, particularly those on Forex. Forex pretty much covers everything in terms of income that you make from trading, whether it's a corporation, in which case corporation tax, or as an individual, in which case income tax, and indeed capital gains tax in certain circumstances. There are no special tax rules necessary according to HMRC. They don't need to treat it differently. The profits, chargeable gains, allowable losses, they'll be considered on a case-by-case basis, based on individual facts, pretty much like anything else. They'll look at what's actually happening, look at how that is treated in the existing tax regime, and there will be an answer. However, very interestingly, in what is otherwise a very succinct, very well-drafted brief that demonstrates clear understanding of cryptocurrencies, it actually suggests the possibility that the transaction may be so highly speculative that it is not something which is taxable, and draws the analogy with betting and gambling. Now that's interesting for miners, because there's a suggestion, perhaps, although they're not saying it's their position, but they're giving you the opportunity to argue it, that what you're doing is a kind of lottery that is chance, and therefore is akin to gambling. Now, if you've got proceeds from gambling, proceeds from gambling are not taxable at all in the UK. Towards a wrap here, chargeable gains and allowable losses. Now I'm sorry folks, this is the other bit of bad news. Every cup of coffee that you buy with Bitcoin could give rise to a chargeable gain. So let's say you get this asset, a Bitcoin, you mined it, and on the day you mined it, that Bitcoin was worth whatever it's worth. Let's say you mined it some time ago, it was 10 quid. And now you buy a cup of coffee and your Bitcoin is worth 300 quid. So you've now realised on the value of the cup of coffee at any rate, you've crystallised a capital gain, you've realised a gain. And so you've got to look at how much did that cup of coffee cost you today? How much did the Bitcoin cost you when you originally acquired it, when you mined it, or you bought it, or you paid it as a salary? What was it worth then? That's its base value. And the difference between the two is a capital gain. And every time you buy your cup of coffee with Bitcoin, you give rise to a chargeable gain. So this means capital corporation tax for companies or capital gains tax for individuals. Now the record keeping for this is going to be challenging because you've got to know exactly when you acquired every Bitcoin, and you're going to have to know exactly how you spent or disposed of every Bitcoin. Good news, I suppose, is that in the UK we have a very generous capital gains tax allowance. You're allowed to make from the 6th of April, in just a few days' time, £11,000 of capital gains a year without having to pay any capital gains. I'll be taking questions just once, I believe, in just a moment. And the other good news is that capital gains tax rates are lower than income tax rates. They're either at 18% or for higher rate taxpayers at 28%, which compares with 40% income tax rate. So that's what I have to tell you about the UK, about HMRC. I'll take a few questions in just a moment. On the regulation front, there's been a lot of news since I last stood up here about a month or so ago. The usual raft of warnings from disparate countries, but two very important pieces of news, one from China and also on the tax front, announcement paper published by the IRS on tax treatment in the USA. There isn't time to deal with that today, but if you do want to find out some more about it, I was invited on as a co-guest host on Epicenter Bitcoin. It's sort of Europe's answer to Let's Talk Bitcoin podcast. You'll find it on soundcloud.com/Epicenter Bitcoin. It came out today. You can also download it from on iTunes and from Stitcher. So, do we have time for quite a few questions? Well, as with any tax matters, if you incorrectly file your tax return, then they charge penalties and interest.